SaaS Backwards is sponsored by Austin Lawrence Group, specializing in demand gen for SaaS. It sure is noisy. I deleted 100 emails from vendors just this morning. Your buyer has gotten better at ignoring you, and you're gonna need a big idea if you want to cut through all that clutter. Austin Lawrence is just the right agency to help you find it. So if your campaigns are falling on deaf eyeballs, let's talk. Visit austinlawrence.com today and let's build something bigger.
Welcome to the SaaS Backwards podcast, where we reverse engineer the success of fast-growing SaaS firms and explore strategies CMOs and CEOs are using to drive their businesses forward.
Welcome to SaaS Backwards, a podcast that helps SaaS CEOs and CMOs to accelerate growth and enhance profitability. Our guest today is Pat Meegan, a senior partner at Maple Street Advisors, a professional services company focused on pricing, strategy, and execution, and go-to-market transformation. Before we dig in, Patrick, please tell us a little more about your background and your company.
Yeah, thanks, Ken. Glad to be here. So first off, a company, we are, as you mentioned, a professional services company, but we're a boutique, and we're focused in two very specific areas. One is pricing and pricing excellence and execution, and the other is go-to-market. And we stay in our lane, and that allows us to be really deep in those areas. And we have a team of about 20 people that work in the pricing and go-to-market space. My personal background, I have spent the last several years in the pricing consulting space and lead the team that does all the SaaS projects, been involved in, I don't know how many SaaS projects, but tons of them over the years. And we have a lot of success in that area. Something that's different about how we approach it, being a boutique, is the partners are very involved in the project. They don't just disappear after the pitch and show up at the end. So we're very focused on having the experience in the projects. Before getting into the consulting space, and this is something that influences our work, is the senior leaders of the company came from operations backgrounds, being in as sales leaders, as sales reps. We've executed pricing projects. We designed pricing as someone who has to live with that pricing. And we know how that is, and that influences how we create pricing solutions so that they can be executed successfully. So I spent a number of years as an analytics leader, as a sales leader, as a sales rep, and then also just early in my career was in consumer products. So a lot of different experiences that lend toward pricing success and insight.
That's great background and way to get into our episode. And today we're going to focus primarily on pricing, but I also want to talk a little bit about drift a little into go-to-market and how pricing and go-to-market get related. But before we do that, from the website, it looks like your ideal customer actually is the private equity firm itself. And I'm curious why your firm targets that, and was that always the way you went to market?
Yeah, and it's deliberate because if you think about, we serve the middle market firms. So a lot of times that's SaaS companies between 5 million and 100 million for the bulk of where we spend our time. And we look at what the larger companies often are served by large consultancies at a much higher price point, but that middle market firm, the ability to pay for a project, but still be served at a quality level that the larger companies get. We saw that as an opportunity to position ourselves against that mid-market firm and have seen a lot of success there. So you think about it, these are firms that are in a lot of times growth phase, and they've got to be smart with their money. They've also got to get the results. And, these PE firms are coming in and investing. They're including oftentimes pricing in their investment thesis. And so, we come in as a partner to be able to help them achieve some of those goals of achieving growth, along maybe customer acquisition, it may be operational improvement, but pricing can be a huge lever to achieve the PE firm's goals in their investment. The other part of that I would add is that if you think about it, some companies take the approach where we're going to do a project with you, but then we're going to keep extending and adding on to that. Our approach is different in that we want to do a project with a portfolio company that's part of the PE firm's holdings. And, we want it to be successful so that then the PE firm has us go to their other portfolio companies and drive value with them as well, versus trying to just keep extending with individual companies.
Yeah, it makes a lot of sense. I just know that, for professional service firms, the PE company it seems like a great target, a little hard to get your first or second gig with them. But I think then once you do, it can be the gift that keeps on giving if you do a good job.
That's right. I mean, you think about what PE folks are up against. They have demanding requirements of them to be able to make their investments perform. So if you can go in there and enable them and their teams to be successful in achieving those goals, then it becomes compelling for them to use you in a number of ways and to refer you. So, being able to get those at bats early on is critical, and then being able to show that value. Ultimately, you think about how PE folks operate. It's all about the value and what you can deliver. And they'll tell you that. They're straightforward, and it's something that I think is really appreciated working with that market.
Awesome. Let's go into pricing issues for SaaS firms, and I think kind of segueing from the PE firm, I want to ask you about growth through pricing, because that's obviously what the PE firm is very concerned about. As you said, they want to see their acquisitions have greater success post-close, right? So how do you know if there's opportunity, or what is the opportunity for growth via pricing for most SaaS, and how do you know if you can raise price?
Yeah, it's a really important question. So if I think about it in a few ways, kind of 4 typical areas that would be indicators that you have an opportunity for pricing. First is that if you don't have a clear pricing strategy and your leadership team doesn't feel like that's something that everyone can point to the same strategy and have confidence, and it hasn't received focused attention and deliberate build of that strategy, then that's one thing that starts to check the box on this is probably an opportunity. Second is if it's been 6 months to a year and you haven't touched pricing in the SaaS world where there's so much change, then you might be a candidate. Third is I think about the market data that's been obtained. A lot of times when we're talking with folks or a PE firm has acquired a company, they're citing some market data they've obtained that indicates there's some upside for pricing or something that's better in the market, or there's sub-optimized pricing structure at the firm. And then fourth, I'd say there has been a lot of value in the product or services that's been added, but monetization hasn't been touched. So the product keeps getting better. It's markedly better. You're hearing great feedback from the customer, but it's the same price you've had. After a while, some of that's got to get touched because you're leaving money on the table.
I think that's a really interesting point, especially again, in the SaaS world, we're frequently updating the product, and that has an accumulated effect over 6, 9, 12 or more months, right? Your product could look very different today than it did just a year or a year and a half ago.
Yeah, what's interesting often is you see a company that hasn't built that muscle of taking price increases or adjusting pricing over time. There's a lot of concern that if I take pricing, I'm going to lose my customers. What we often see is if you're delivering a lot of value over time via your roadmap and your launches, they're perceiving additional value as well if you're doing a good job of getting credit for that from them. And then a lot of that offsets that churn concern. And there's some tactics you can use in terms of not taking a broad brush approach, but overall, if you're delivering a lot to the market, you've got a strong argument for why prices should go up over time.
Yeah, I think that might also be true in the case where the product might have had a period where it was moribund and then got a lot of attention, right? So now you have a window where people are beginning to appreciate the reinvestment in the product, and it would almost come as an expectation that there might be a change, right?
Yep. Yeah. And that's the thing is the other part is the broader context. If a company is not used to raising prices, that's one thing. But the buyer on the other side, it may be buying within their tech stack, 10 different products from SaaS, and they're seeing price increases all the time. So from their perspective, this is happening frequently, and it's not as new to them as it is for the company that's considering their first increase in a while.
Understood. So on the back of that, we have the sense that there is the ability to raise price. How does a CEO or a CRO, the team, maybe including the CFO, how do these folks decide whether they should do it themselves or bring in an advisor? I mean, there's a fair amount of content out there. Thinking about like people at OpenView have a whole playbook for people to do their own pricing, right? I mean, they do beautiful work at OpenView, but even with all that, out and available, how do you advise your clients and prospects on DIY versus bringing you in? And, what's the value add of having an advisor work a pricing strategy?
Sure. And to your point, there are advantages to the DIY side. A couple as I think through it. One major advantage is that you've got your company working on pricing and thinking about it in a way that they haven't before, especially when, it's the first go at it. That is a super valuable process because they're building, as I said before, that muscle internally of being able to analyze market information, strategize about what the right price metric or pricing structure should be. What are the right tiers? Should this be usage-based or a flat fee? What are those different considerations that is extremely valuable for the internal team to do that process? Now, the flip side is if it's your first time doing anything, it's kind of like doing a remodel in your house. The DIY has the same risks, right? You haven't done this before. You're not a professional carpenter. And so there's going to be some rough spots and things you didn't consider just because this is the first one you've seen. The flip side of that, well, I guess one other consideration is the capacity of the team. Often when you think about, say, a PE-backed firm, there are a lot of priorities and a lot of changes going on. And so do we have the internal capacity to do it? Do you have the internal expertise? Or should we farm this out and have them work with us closely so that we get the advantage of the external advisor? And that's where the external advisor provides that market intel of seeing across many SaaS organizations, the pitfalls of what works and what doesn't, the toolkit that's very deep, that's been used and tried and true, that often isn't capable, within the team. And it allows that consultant to carry the bulk of the work. But, done well, what you're trying to do is a couple things. Is you want to be including the portfolio company or the client company in the work as you're going. You don't want to black box it where you're absorbing information and coming in later with a magic solution. We really see it works best when you're bringing insight frequently and debating that and walking through that design process versus it being, the consultant has all the answers. When you get into the implementation phase, that's especially true because that domain expertise that lives within the portfolio company, marrying that with the expertise of the pricing folks is really where you get the best outcomes because you need to know what's going to work. You need to pressure test this with sales folks and with the leadership group to make sure it's something that's going to fit the market.
I think also a lot of these companies, especially if it's their first big round of investment, they're not used to taking advice professionally, right? They may not have had the budget to say, hey, I'm going to take advice in these 3 or 4 areas. And so I think it might also be not quite a cultural thing, but a habitual way of doing business because the PE firm, there's a fair amount of money that goes in and a lot of expectations with it, right?
Yeah, it's a great point. Sometimes companies, they haven't worked with consultants before. There's resistance or there's, prejudice against consultants and, they've been burned before or they've had a bad experience. And when we go through these projects, what we've found time and time again is the teams that are open to hearing new ideas and being pushed on their thinking are those that reap the greatest benefit because while they may not take every idea that they're pressure testing internally and saying, does this make sense? Should we change it? They're at least considering options that could benefit them. We had some experiences recently where as we were going through part of our process of collecting competitive information, the sales leader was very open. And as we identified some areas of opportunity for how they're going to market, they were able to quickly make some changes that resulted in huge gains in opening up their funnel and driving more volume. So, a lot of that comes down to how used the company is to working with external advisors.
Yeah, it makes a lot of sense, which sort of brings me to my next question. We touched on this, but I want to really unpack it a bit. How does a CEO, CMO, CRO, one of these folks, they have a sense that they might be ready to do a pricing project? What are the things they should look for? And, what do they need to be prepared to do to have a pricing project go forward?
Yeah, we talked a little bit about some of the indicators of just, is there pricing upside? Is there a hypothesis that pricing could be better? So that's one thing is if you got some of those indicators that pricing is an opportunity, that's an important indicator. But one of the other pieces to consider, and I hinted at some of this earlier, is, given that we work with PE-backed companies mostly, is that there's an agenda at those companies. They're making a lot of changes. So is the juice worth the squeeze on a pricing project? And usually the answer is yes, because if you do the math on it versus a cost improvement project or sometimes a go-to-market project or a sales volume focus, pricing often is one of the biggest levers to drive profitability, drive revenue, both with new customers and with existing. And with a lot of times thinking about those two separately is an important way to consider how you're going to go about it. So for instance, teams are often ready when they have the organizational ability to focus on a project and give it its due attention. And the sales team is ready to be able to execute with some enablement. Teams that are still being built. So for instance, a few weeks ago, we were talking with an executive that we had some huge success with at a prior SaaS company who's now at a new company. And he was pointing out, we have all the indicators of pricing upside. However, our team's not in a place yet to be able to go after it and successfully execute given the talent level or the training level or having the right people in the right seats. And so they needed to get that done first before they were ready to take on a project like this, which we're chasing that down in late Q1.
Makes sense. Kind of maybe digging deep, let's say we have the sense that we're ready to go. We've got people, we know there's opportunity. I just did some customer interviews where the customers indicated that our client was a least cost solution. So pretty clearly pricing opportunity, right?
Yeah.
Yeah. So, you have a good idea that there's got to be some pricing upside. How do you need to prepare for that? What kind of data do we need to have available to us? And what form do we need to put that data so that either we can be successful in a DIY or bringing a firm like yours in, you can be successful. And I assume that the more prepared we are, the better job you can do, the more efficient it is, less time it takes, right?
Absolutely. Yeah. So if you think about it, there's data that you've got internally or currently that's going to be an important foundation. While it doesn't anchor you to what the solution has to be, understanding that having a fact base around the current state is critical. So for instance, if I interview sales leaders or ops leaders or executives, and I hear one thing, and then I go into the sales data and I look at what I'm seeing there, I can calibrate myself to the reality. And oftentimes it lines up with what the exec said, but other times it doesn't. And there's surprises that come out of that where you're saying, actually, there's some different things here that we should be considering that aren't coming through in how the team's thinking about it. So for instance, one that we use foundationally is the sales transaction data. So it's things like looking at customer, at a transaction level, by customer, by product, by time frame of the contract, and looking at usage, how much people are using the product. This is something that we see a huge variation on. Is some companies do a great job of capturing usage data, even at a product feature level by account, which is really insightful. It's really hard to find, though. A lot of people don't track their usage that way. But a lot of times we'll fish for, hey, what do you have in terms of usage that could be important? I'm going to jump back to the sales transaction data. Is you asked a question about how do you prepare some of that information? One of the things that we run into often, and that any team is going to be looking at this, is the ability to look at the sales data by your products and by your customers. So if you don't have the data structured in a way that you can look at it that way, it often hampers your ability to gather some of that insight. So if everything's aggregated at a total customer level, and I can't break it down by they're buying services here and they're buying product A here and product B here, and this add-on, and this is what we're paying for implementation versus ongoing SaaS product, then it's really hard to understand what's actually being sold. You kind of have to piece that apart. So some good hygiene in the structure of your data can be helpful there. Another thing that's gathered often is the competitive data. And this is an interesting one because you'll see some teams do a great job of gathering information. But often what's helpful when you think about going back to your question around the DIY is the ability to aggregate that information, creating a map or a way to compare or to visualize where your your product is, where the competitors' products are, and the apples to apples basis. And then where are some of those comparisons that aren't apples to apples? Say you have a product that's unique and it's at a higher price point, or it's unique and it's at the same price point. Having some of that ability to visualize it in charts and maps can start to identify some of those opportunities. Something else that we find that's really rich is, and this goes back to the idea of, think about I grew up early on in my career in the lean manufacturing environment. And something you learn there is the go and see principle. So you watch the gong calls and you see how reps are actually handling pricing conversations and discounting conversations and negotiations versus what you're hearing from the leadership team. And then you're able to glean your own insights and say, okay, here's something I see they're doing really well. Here's some things that we need to build out in the discovery phase, or how they're handling and positioning the pricing could be bolstered. Because even if you do a great job in all the pricing tables and the price metrics and the price structure and the strategy, the tip of the spear is where all the action happens. And enabling that sales team to be absolutely effective is a critical part of doing a pricing project, because that's all the market sees is what the pricing or the sales team executes.
Yeah, actually, I want to kind of ask you sort of a related question on the technology. So a lot of times firms are hopeful for investment, right? So they're not yet, invested in by your ICP, the PE firm. So maybe they need some technology in place, not only for pricing and customer success, but also to position to be more attractive. And the thing that occurred to me was when you said having usage by product. And there's some customer success software out there that does that as well. I think is one of them Gainsight, I think.
Yeah, yep. Gainsight's one that we see probably most often. And
Yeah, so
Pendo is another one that we see frequently being used.
yeah, so I think that having a tech stack in place well before you bring in an advisor or try and do your own pricing. So there might be some foundational tech stack stuff. If you don't have it, maybe it's a good idea to start looking at what are the down the line implications of subscription software, customer success software. Are there other softwares that capture data categorically that are really important for you?
Yeah, and I like where you're going here is if you think about it, companies trying to grow, trying to improve in these areas. I always like to think about it as, what's the insight or the outcome that I'm looking for? And then what's the technology that can support that versus a technology first approach? Because I think what you're doing then is saying, then you have a wider range of options. So if you're saying, for instance, we need to have better insight into how we segment and understand the performance of our customers, just from our internal basis. And so, for instance, a client worked with before, they used Tableau, which, obviously now is owned by Salesforce, but they were able to take some of that data and just, on their own, and often much cheaper. It was a startup, and they were able to kind of segment out performance clusters of the customer base, and then create a strategy for these different clusters, these different groups that was wildly successful because they could see what the problem was that was impeding greater adoption or greater success with their product. So if you think back and say, okay, what are the problems that we need to hurdle? What are the things we need to achieve to be able to get to this next stage of growth? And then what kind of software do we need to do it? It may be analytics software. There's a bunch of them from, whether you're going to go really deep on it, like an Alteryx, or you're going to use, different softwares that can provide analytical capability, or the Gainsights and Pendos on usage. That's why I think if you go back and say, what technology or what problem are we trying to solve? And then you say, okay, let's go hunting for technology that enables that. A lot of times from a startup perspective in an early stage SaaS, a lot of it really is just mining some of the data that you have in your CRM and understanding your customers better, or, leveraging some of the tools you have. For instance, I can't tell you how often, I mentioned Gone calls a minute ago. I can't tell you how often teams haven't even looked at what they're gathering and saying, what's this telling us about opportunities we have internally to just improve our blocking and tackling of the day-to-day. Usually when a PE firm comes in, they don't have a silver bullet, a magical solution. They're effectively saying, here's some key areas of priority, and then we need to improve just how we operate in those areas is usually where they're spending a lot of time focusing.
Really interesting. And I guess also in terms of technology, if you're building your own stuff, what instrumentation do you build in? And do you log that data so you could even do something as simple as a BI tool to give you the insight, right? So building instrumentation in or buying products that can help you get to that, probably helpful in a future posture to be able to do pricing more effectively.
Yep.
When we had our prep session, we talked about stages of growth and the quality of the data, and we sort of scratched at it just before here in terms of younger companies, but you said something about data fidelity based on the stage of growth and who they were selling to. I'd love you to unpack just a little bit about what you meant in terms of, it's a B2B sale. Is it individual users or enterprise? And what did you mean by data fidelity itself?
Yeah. So, the expectation, if you think about an early stage SaaS company has, a smaller team focused on a lot of key priorities. A later stage company that's got the enterprise type scale typically has a lot more internal resources and capabilities. So, as a company is growing, they need to be thinking about some of what we just talked about of saying, okay, what is the insight capability we need across product, across pricing, across, profitability, all these different metrics, across usage to be able to track it. So at an early stage, you typically have a narrower ICP that you're going after. You have a much more stripped down solution. And so you don't often need as much information, and which is fine because you often don't have the money or resources. When you get into the enterprise phase, you're looking at much more clear segmentation of your customer base and the products that are going to them. And often you have a much more unbundled product versus the startup phase. So you got to be thinking about how are we able to look at a product level and at a usage case level, having the right pricing, the right feature and capabilities at the enterprise stage, And that fidelity comes in is that, it's sometimes scary. Like we just had a conversation with a prospect that was saying, hey, we're a large company. They'd already crossed the $100 million threshold, but their data was all over the place. Some of it was they couldn't even get data at the transaction level and tie it to some of the invoicing, or you have a company that's rolled up from a number of acquisitions, and then being able to meaningfully leverage that data was really challenging because companies had very different levels of diligence in how they built out and tracked their data over time. So when you bring it together, it's kind of a mess sometimes, but the opposite is true when there's been great diligence on the data side. And we just talked to somebody recently that was this case that said, we're ready to jump in. We don't have pricing expertise internally, but our data is just rock solid and clean. We've done a great job there. That makes all the difference in the world of being able to both manage and make improvements and gain insight with how they handle their data as they grow.
Do you see a difference in the preparedness of firms that use subscription billing software versus homegrown billing or things like QuickBooks? I mean, I know of $20 and $30 million SaaS companies doing invoicing on QuickBooks still. So, managing their accounts on QuickBooks. So can you sort of talk to the value of subscription billing softwares?
Yeah. And if you think about it, it kind of goes back to some of the things we talked about before when, a DIY versus using an external advisor. In this case, some of that applies here too, right? If you're able to use your internal development team to build out your own billing software, I mean, you can do whatever you want. The alternative, though, is the billing software folks are solving this problem day in and day out for others, right? So if you're talking about a company that's doing billing software for all kinds of verticals and industries, as they solve different problems in different areas, they flow that into the product, and that depth and capability and focus allows for tremendously capable billing software. However, it's that question of, do you need that flexibility? And is your use case really that unique? I think that's one of the questions that often I would ask. And then we see when they do it in-house, it's like, a lot of times companies will see themselves as very unique, but when you back up and look at it, it's like, well, you're behaving like a lot of other vertical SaaS, or you're behaving like a lot of other horizontal SaaS or whatever. And maybe the additional effort and uniqueness isn't driving more value, and you could outsource it and save yourself a lot of dev time. I think that's a consideration. It's not in every case, but it really comes down to, does it need to be that unique? Do you need to have that nimbleness? And, should you put your resources toward that versus, buying a highly capable, billing SaaS product?
Yeah. And the proper SaaS billing products also, I'm thinking like a Paddle or things like that, give you the ability to start doing some testing on pricing, right? So you can start building multiple pricing models into your current go-to-market, supports your access to data to do further analysis. And I guess as pricing practice, right? The practice of pricing evolves. These guys, it's their business to put those new best practices into the product, right? To remain current.
Yeah. And we're talking about billing specifically. I think you think about pricing software in some cases, it's, adjacent to this is, usually larger companies get into using pricing software as part of their process. It also depends on the vertical. If you're a CPG or a consumer product company, a lot of times there's an earlier need for being able to manage pricing and software versus others that are more, say, B2B SaaS or, B2C SaaS a lot of times has different aspects that you consider and should you use it. Here's one of the things I also think about is like a demo doesn't cost you anything. And it's worth considering and saying, okay, let's just see what's out there. And we'll do that often, and just kind of going out and shopping a bit and saying, is it worth it to consider a software versus what we could build in-house? And you're not losing much other than a few minutes if you go and shop, and it can open your eyes to capabilities you might not even be considering.
Awesome. The last thing I want to talk about, I feel like we've been cheerleading the notion of a pricing change, but why don't we talk a little bit about, the consequences of pricing change? The hope for outcome is greater profitability without materially impacting churn or customer satisfaction. But what are the possible downsides of a pricing change? And just give us a little bit of a window into that.
Yeah. I mean, if you think about it, it is fundamental to your business model, right? And we talk about cheerleading a pricing change is partly because if your pricing motion has been pretty dormant, then you probably need to get after it. But as you think about the considerations, and this is why we always are thinking about that implementation phase, there can be all kinds of great academic insights that you'd find as you go through the process. The question is, one of our partners is fond of saying, eventually someone's got to call a customer. And so using that as your kind of North Star, you're saying, is this something I can take to market and be successful? So you think about it in terms of testing. Okay. So what's our pilot or testing approach? And in say, B2B SaaS, a lot of times you'll do a segmented pilot and you'll prove it out and then roll it out to the whole company. Or if you're doing, say, B2C SaaS that has transparent pricing to the market, A/B testing on a website can be useful, done right. There's also risky ways to do it. So you think about the downsides. You don't want to be sitting there jerking your customer around saying, hey, I just looked at your website yesterday and it was this price, and today it's this price, or my friend just bought this and they're a very, very different price. And they bought the same thing at the same time. You start to have some negative equity things that could happen there. Also, setting aside the piloting and the testing, is that like, for instance, you're moving a price metric to you're moving a model. So for instance, in educational technology, we've helped some clients go from, say, like a teacher-based pricing approach to a student-based pricing approach because it had significant advantages and things like that. Well, you want to be able to think through and model some of those considerations and say, well, what happens? We're going to end up downgrading some of these existing accounts? And you kind of have to look at that at the account level to understand, well, how's this going to impact them? You can't just take hope as a strategy. So as you think through this kind of last phase of evaluating this pricing strategy, this pressure testing needs to be an important part of it, be a foundational part of it, because what you're trying to do is poke holes in what the market's going to identify anyway. Okay, so if I've got a current model and I'm just about to cave my pricing on part of it, I need to know that before I ever execute it, because it's going to be something that's really hard to unwind. So thinking about where should people migrate? What are the incentives for them to migrate? And if we're moving to a usage-based model, what if usage is contracting and the market's changing versus growing? And you always want it to be growing, but if it's not, this can expose you to downside. So maybe we consider a hybrid pricing approach that considers usage along with another factor so that you get some of the upside, but you protect yourself against some of the downside.
Yeah. On the usage-based thing, I've also seen SaaS firms sort of say, hey, when you grow, you step up to a new level of usage, you can't go back down, at least in the current contract year, so you try and protect yourself that way.
Yep. Caps, limits, true ups, a lot of times the true up process can be used, but like I said before, the market's going to tell you what works and what doesn't with your approach. And as much as you can identify that before you launch it, the better off you're going to be.
Hey, I think that's a great place to land our episode. Pat, this was just fantastic conversation about what I think is one of the most important aspects of, getting a leg up on growth in a SaaS. Yeah. If listeners want to reach you, learn more about your firm, what's the best way for them to do that?
Yeah, you can either go through our website on maplestreet.com, or you can email me at patrick.meegan@maplestreet.com. And pretty easy to find us there. You can find us on LinkedIn. But yeah, we're out there and happy to talk with whoever.
That's great. And if people want to reach me, I'm on LinkedIn/in/Ken Lempit. And our website is austinlawrence.com. And if you haven't subscribed to the podcast, please do so wherever podcasts are distributed. Hey, Pat, thanks so much for joining us on SaaS Backwards.
Thanks, Ken. It's been a pleasure.
Thanks for listening to the SaaS Backwards podcast, brought to you by Austin Lawrence Group. We're a growth marketing agency that helps SaaS firms reduce churn, accelerate sales, and generate demand. Learn more about us at www.austinlawrence.com. You can email Ken Lempit at kl@austinlawrence.com about any SaaS marketing or customer retention subject. We hope you'll subscribe, and thanks again for listening.